Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody guys, today the New Year's Eve we will take a look at the New Zealand dollar. It becomes a tradition to analyze some our secondary currencies that we rarely take a look at within the year. It's usually the Canadian dollar, Australian dollar, New Zealand dollar, but currently as you can see on the euro currency nothing happens. Actually this week has become the inside one to the previous week, and I do not see any necessity to change the view and make the additional analysis. So mostly, if I would do this, it will be just reposting what we already have said on this week. The same on the Great British Pound. So on the Great British Pound, if you remember, we have discussed the short-term situation, and mostly it still stands the same. That's why I think that it's a good idea to take a look at something else that we rarely discuss here in our forum and in our analysis. And I have chosen the New Zealand dollar just because it shows more interesting action compared to other currencies, at least on the technical side. Fundamentally and the long-term analysis, guys, if you would like to read our report, of course, you will see that it mostly depends on external driving factors. So the two major driving factors for New Zealand dollar is the dairy market and external political situation. Mostly it stands in relation to the China economy. Speaking on the dairy market, we have provided detailed analysis on what to expect in the coming 2-3 quarters of the 2019. And it seems that nobody expects some big changes on the dairy products, dairy market. So mostly expect some minor growth on the market, less than the 2%, and mostly it should stand flat in terms of the price change and in terms of the production. So from that standpoint, we do not see any significant support to the New Zealand dollar. But other two markets, other two factors are more significant. First of all, the Chinese economy, and Fathom Consulting today has put a report that we also partially have put in our forum, and they show that they see the slowdown of the Chinese economy, and that could make the negative impact on the New Zealand dollar as well, as because actually it stands in the same region. And the second, what is also important, is the overall situation with the major New Zealand dollar rival is the United States dollar. In the current situation, when it's difficult and tricky political situation in the world, and we see the demand for safe haven assets, you would just take a look at what's going on with the gold market, what has happened recently with the Japanese yen and Swiss franc. So growing demand for the safe haven also could raise the value of the United States dollar as well, and that could press on the New Zealand dollar. That's why in the longer term perspective, on the monthly, on the weekly chart, situation stands dual. So and to understand clearly what really will happen to forecast the longer term perspective, we need to see first the reaction on the major levels that stands on the weekly chart. For example, on the weekly chart, it could be either the downside breakout here, or we could get A, B, C, D action to the upside, and that will be determined by the external driving factor. While we are waiting for response on the major support, particularly speaking what will happen around the 66.30 area, we will plan our tactical scenario, what to expect within the few weeks on the New Zealand dollar. Although on the daily chart we do not have clear patterns, but still here we have some tools that could help us to forecast what really could happen. First of all, take a look that we have the two reversal swings on the market. First reversal swing has happened here to the upside, and minor reversal swing stands in opposite direction. So this is they are not contradictory each other. They are swings of the different scales, but they have a common feature. As you know, it's common practice to expect the deep retracement as soon as a reversal swing has been formed. Why? Because reversal swing is the first swing in opposite direction after long-term trend. And the momentum that exists on this trend press on the market as soon as reversal swing has been completed and forces the market to show the deep retracement. That's why every time when the market forms reversal swing, we're watching for a deep retracement. It means that in the current situation on the daily chart, we will be watching for deep retracement here, at least to the 6630 area. This will be 618 support, and take a look at this trend line also stands in the same area. And here we will be watching also for deep retracement to the upside on this downside swing. It means that potentially here we could get, for example, something like ABCD pattern down to the 618 support. That in turn could give us the catalyst to buy, or as I said, we will watching for response to this area, or if market will not hold here and start dropping, that will give us another patterns that were mentioned in today's weekly report. So you could read that also the weekly chart to understand what we could get here. But tactically within the week, first we are watching for a pullback here. Second, we are watching for downward continuation with the first target around 6630. That's our tactical task for a few weeks. Now, if you'll take a look at the 4-hour time frame chart, you also will see that this swing takes the shape of the ABCD pattern, and this pattern mostly is completed. That creates the background for a possible pullback. And as I said, here we also will be watching for a deep retracement because this is also downside reversal swing. As you can see, this swing down is greater than this previous swing up and even greater than this swing up. So it means that we will be watching mostly for 6860 area as a possible destination point of the retracement. Well, theoretically it's possible that the market will hit 68, only the 68 sharp, because this is confidence resistance. But still, we will keep in mind this level as well, just because it's the feature of the reversal swings to show the deep retracements. So that being said, on the New Zealand dollar, strategically, we need to see a response on the major support levels to understand what we will get. Either ABCD action here to the upside, or downside breakout and drop lower approximately to the 62 area. In the short term perspective, we will work with this tactical setup with the pullback here somewhere to 68.60. At least currently we will be watching for this area, and downside continuation to the 66.30, so major 618 support on the daily chart. That's what we see right now on the New Zealand dollar.